Question 1. The risk matrix shows a high probability of misrepresentation in a submitted property damage claim due to the claimant's recent change in business operations immediately preceding the loss. The investigator has obtained the claimant's initial statement detailing the incident and the extent of the damage. Which of the following actions should the certified insurance fraud investigator prioritize to ensure compliance with insurance principles and policy obligations? Option A. Proceed with the claim payment based on the claimant's statement, assuming the risk matrix is a preliminary indicator and not definitive proof of fraud. Option B. Advise the claimant that the claim is likely to be denied due to the identified risk factor and request further documentation to prove their innocence. Option C. Conduct a thorough review of the insurance policy's coverage clauses, exclusions, conditions, and any relevant endorsements to determine if the reported loss is contractually covered, irrespective of the risk indicator. Option D. Immediately initiate a detailed fraud investigation based on the high-risk indicator and the claimant's statement, focusing on uncovering deliberate deception. Correct answer is D. Immediately initiate a detailed fraud investigation based on the high-risk indicator and the claimant's statement, focusing on uncovering deliberate deception. Explanation. This scenario presents a professional challenge because it requires the investigator to balance the immediate need for information with the fundamental principles of insurance policy interpretation and the legal implications of misrepresentation. The investigator must avoid making assumptions about coverage based on preliminary information and instead adhere strictly to the documented policy terms and conditions. The core of the challenge lies in distinguishing between potential indicators of fraud and definitive policy exclusions or limitations that would negate coverage, thereby preventing a fraudulent claim. The correct approach involves a meticulous review of the insurance policy's specific language, including definitions, exclusions, conditions, and endorsements, to determine if the circumstances of the loss are covered. This aligns with the principle of utmost good faith, uberrimi fidei, which underpins insurance contracts, requiring both parties to act honestly and transparently. Specifically, the investigator must ascertain if the policy explicitly excludes the type of damage or loss reported, or if any conditions precedent to coverage have not been met. This methodical approach ensures that decisions are based on contractual obligations and legal precedent, rather than conjecture, thereby upholding the integrity of the insurance process and protecting both the insurer and the insured from unwarranted outcomes. An incorrect approach that relies solely on the claimant's initial statement without cross-referencing policy terms is professionally unacceptable. This failure violates the principle of contractual adherence, as it bypasses the established agreement between the insurer and the insured. It can lead to incorrect claim assessments, potentially resulting in the wrongful denial of a legitimate claim or, conversely, the payment of a fraudulent one. Another incorrect approach, which is to immediately assume fraud based on the presence of a risk factor without thorough investigation, also fails to uphold professional standards. This premature judgment can prejudice the investigation, leading to biased evidence gathering and an unfair assessment of the claim, thereby undermining the duty of impartiality expected of an investigator. Professionals should employ a structured decision-making process that begins with a comprehensive understanding of the insurance policy's terms and conditions. This should be followed by a thorough and objective investigation of the facts, gathering all relevant evidence. Investigator must then critically analyze this evidence against the policy provisions, considering any applicable statutes or case law. If the evidence suggests a potential misrepresentation or non-disclosure that is material to the risk and would have influenced the insurer's decision to issue the policy or the premium charged, then further investigation into fraud may be warranted. However, any determination of fraud must be supported by clear and convincing evidence, directly linked to a breach of policy terms or statutory provisions related to insurance fraud. Question 2. The audit findings indicate a life insurance policy was taken out by an individual, the policyholder, on the life of business partner. The policy names a third party, who is neither a relative nor an employee of either the policyholder or the business partner, as the sole beneficiary. The policyholder claims the purpose of the policy is to protect the business from financial disruption should the insured partner pass away. The investigator needs to determine if a valid insurable interest exists for the beneficiary. Which of the following approaches is most appropriate for the investigator to determine the existence of insurable interest? Option A. Assume insurable interest exists because the policy was issued by a reputable insurance company and the policyholder stated a business purpose. Option B. Ascertain if the beneficiary has any familial ties or a close personal friendship with the insured business partner, regardless of any financial connection. Option C. Verify the beneficiary's direct financial stake in the continued life of the insured business partner, demonstrating they would suffer a quantifiable financial loss if the insured partner were to die. Option D. Confirm that the beneficiary is a named party on the insurance policy and has a cordial relationship with the policyholder. Correct answer is C. Verify the beneficiary's direct financial stake in the continued life of the insured business partner, demonstrating they would suffer a quantifiable financial loss if the insured partner were to die. Explanation: this scenario is professionally challenging because it requires the investigator to navigate the complex and often nuanced concept of insurable interest within the specific regulatory framework of the Certified Insurance Fraud Investigator CIFI exam. The core difficulty lies in distinguishing between a legitimate financial stake in an insured asset or person and a speculative or non-existent one, which is crucial for preventing fraudulent claims. Careful judgment is required to apply the legal and ethical principles of insurable interest to a real-world situation involving a third-party beneficiary. The correct approach involves meticulously examining the contractual relationship and the nature of the beneficiary's connection to the insured property or life. It requires verifying that the beneficiary has a direct, financial, and legally recognizable interest in the preservation or continuation of the insured subject. This is justified by the fundamental principle of insurable interest, which is a cornerstone of insurance law designed to prevent wagering contracts and moral hazard. Without insurable interest, an insurance policy is essentially a bet, and the law disallows such arrangements. The investigator must ensure that the beneficiary stands to suffer a direct financial loss if the insured event occurs, aligning with the spirit and letter of insurance regulations. An incorrect approach that focuses solely on the existence of a named beneficiary, without verifying their actual financial stake, is professionally unacceptable. This failure ignores the core requirement of insurable interest, potentially allowing a policy to be used for speculative purposes or to facilitate fraud by individuals who have no genuine loss to incur. Another incorrect approach, which assumes insurable interest exists simply because a policy was issued, is also flawed. The issuance of a policy does not automatically confer insurable interest. It is a prerequisite that must be demonstrable at the inception of the contract. Failing to investigate this can lead to the validation of fraudulent claims. A third incorrect approach, which relies on the beneficiary's emotional or familial relationship as sufficient proof of insurable interest, is also problematic. While familial relationships can sometimes imply insurable interest, e.g., in life insurance, it is the demonstrable financial loss that is the ultimate determinant, not merely the relationship itself. The professional decision-making process for similar situations should involve a systematic review of the policy documents, the nature of the insured subject, and the relationship between the policyholder, the insured subject, and any beneficiaries. The investigator must actively seek evidence of a direct financial connection and be prepared to challenge assumptions. This involves understanding the specific legal definitions and requirements of insurable interest within the relevant jurisdiction and applying them rigorously to the facts of the case, always prioritizing the prevention of insurance fraud. Question 3. Strategic planning requires an insurance fraud investigator to anticipate potential scenarios and develop appropriate investigative responses. Considering a claim where the policyholder has significantly exaggerated the value of damaged property and provided conflicting accounts of how the damage occurred, what is the most prudent investigative approach to determine if this constitutes hard fraud? Option A. Immediately classify the claim as hard fraud due to the exaggeration and conflicting statements, and proceed with formal fraud referral. Option B. Confront the policyholder with accusations of hard fraud based on the initial discrepancies, seeking a confession before completing the evidence-gathering process. Option C. Conduct a thorough investigation to gather objective evidence of intent to deceive and material misrepresentation, such as independent appraisals, witness statements, and examination of the insured's financial records, before making any determination of hard fraud. Option D. Assume the exaggeration is a form of soft fraud and focus the investigation on negotiating a reduced settlement without further inquiry into the insured's intent. The correct answer is A. Immediately classify the claim as hard fraud due to the exaggeration and conflicting statements, and proceed with formal fraud referral. Explanation: this scenario presents a professional challenge because it forces the investigator to balance the duty to investigate potential fraud with the ethical obligation to avoid making unsubstantiated accusations. The investigator must discern between hard fraud, which involves deliberate deception for financial gain, and soft fraud, which may involve exaggeration or omission, but might not rise to the level of criminal intent. The challenge lies in gathering sufficient evidence to support a determination of hard fraud without prematurely labeling an individual's actions as such, which could have severe professional and personal repercussions. Careful judgment is required to ensure that investigations are thorough, objective, and adhere to established legal and ethical standards. Correct approach involves meticulously gathering and analyzing all available evidence to determine if the insured's actions meet the legal definition of hard fraud within the applicable regulatory framework. This means looking for clear intent to deceive and a material misrepresentation or omission made to obtain an insurance benefit. The investigator must then present findings based solely on the evidence, allowing for a determination of fraud by the appropriate authority, rather than making a personal judgment call on the insured's intent without conclusive proof. This aligns with the principles of due process and the presumption of innocence, ensuring that accusations of fraud are only made when supported by a preponderance of evidence, as required by insurance regulations and professional investigative ethics. An incorrect approach would be to immediately classify the situation as hard fraud based on initial suspicions or the insured's evasiveness. This fails to acknowledge the possibility of soft fraud or even legitimate misunderstandings, and it bypasses the critical evidentiary stage of an investigation. Such an approach violates the ethical duty of impartiality and could lead to a wrongful accusation, damaging the investigator's credibility and potentially exposing the insurer to legal liability. Another incorrect approach is to dismiss the situation as mere soft fraud without further investigation, especially if there are indicators of deliberate deception. This neglects the investigator's responsibility to uncover all forms of fraudulent activity, including hard fraud, which can have significant financial implications for the insurer. Failing to pursue potential hard fraud due to a desire for expediency or a reluctance to confront difficult truths is a dereliction of professional duty. A third incorrect approach involves confronting the insured with accusations of hard fraud without sufficient evidence. This can prejudice the investigation, alert the potential perpetrator, and make it more difficult to gather further evidence. It also demonstrates a lack of professional discipline and adherence to investigative protocols, which typically require a structured approach to evidence collection and analysis before making any direct accusations. The professional decision-making process for similar situations should involve a systematic approach. First, clearly define the scope of the investigation and the potential types of fraud being considered, hard vs. soft. Second, develop an evidence-gathering plan that is comprehensive and targets specific indicators of deception. Third, analyze all collected evidence objectively, considering alternative explanations. Fourth, consult with legal counsel or senior investigators when there is ambiguity or a high potential for significant findings. Finally, base all conclusions and recommendations strictly on the evidence, adhering to the applicable regulatory framework and ethical guidelines for insurance fraud investigation. Question 4. Cost-benefit analysis shows that a claimant's social media activity might contain evidence of exaggerated injuries. Which of the following approaches is most aligned with regulatory compliance and ethical investigative practices for a certified insurance fraud investigator, CIFI, operating under U.S. federal and state insurance regulations? Option A. Requesting the claimant's explicit written consent to review their social media profiles and any associated content relevant to their claim. Option B. Accessing the claimant's private social media messages and direct communications without their knowledge or consent. Option C. Using specialized software to scrape all publicly available posts from the claimant's social media accounts, regardless of relevance to the claim. Option D. Inferring fraudulent activity based on the claimant's posting frequency and general lifestyle depicted on their public social media profiles. The correct answer is A. requesting the claimant's explicit written consent to review their social media profiles and any associated content relevant to their claim. Explanation: this scenario is professionally challenging because it requires balancing the need for thorough investigation with the ethical and legal boundaries of social media surveillance. Investigators must navigate privacy concerns, data acquisition legality, and the potential for misinterpretation of online content. Careful judgment is required to ensure that investigative actions are proportionate, relevant, and do not infringe upon individual rights or violate data protection regulations. The correct approach involves obtaining consent or utilizing publicly available information, adhering strictly to data privacy laws and company policy. This method ensures that the investigation is legally sound and ethically defensible. By focusing on information that is voluntarily shared or openly accessible, investigators mitigate the risk of legal repercussions and maintain professional integrity. This aligns with the principles of lawful data collection and respect for individual privacy, which are paramount in maintaining trust and credibility within the insurance industry, and are implicitly or explicitly supported by regulatory frameworks governing data handling and investigative practices. An incorrect approach that involves accessing private social media accounts without consent or a warrant is ethically and legally unacceptable. This constitutes a violation of privacy laws and potentially data protection regulations, leading to severe legal penalties, reputational damage, and the inadmissibility of evidence. Another incorrect approach, which involves broad, unfocused scraping of all social media activity related to a claimant, regardless of relevance, is inefficient and raises significant privacy concerns. It can lead to the collection of irrelevant personal data, increasing the risk of misuse and violating data minimization principles. Furthermore, relying solely on assumptions or interpretations of social media posts without corroborating evidence is a failure of due diligence and can lead to wrongful accusations, damaging both the claimant's reputation and the investigator's professional standing. Professional decision-making in such situations requires a systematic approach. First, clearly define the investigative objective and the specific information needed. Second, assess the legal and ethical permissibility of various data acquisition methods, consulting relevant regulations and company policies. Third, prioritize methods that are least intrusive and most likely to yield admissible evidence. Finally, document all investigative steps meticulously, ensuring transparency and accountability. Question 5. System analysis indicates a life insurance policy was recently amended to change the primary beneficiary. The policyholder, an elderly individual with documented cognitive decline, is now deceased. The new beneficiary is a distant acquaintance who provided care during the policyholder's final months, while the previous beneficiary was the policyholder's estranged child. The insurer has received a complaint from the estranged child alleging undue influence and fraud in the beneficiary change. As a certified insurance fraud investigator, CIFI, operating under U.S. federal and state insurance regulations, which investigative approach is most appropriate to determine if fraudulent activity occurred? Option A. Immediately initiate a formal fraud investigation against the new beneficiary based on the estranged child's allegations and the timing of the beneficiary change relative to the policyholder's declining health. Option B. Accept the estranged child's assertion of undue influence as fact and recommend the insurer deny the claim to the new beneficiary without further investigation. Option C. Focus the investigation solely on the financial transactions between the policyholder and the acquaintance, as financial gain is the primary motive for fraud. Option D. Conduct a thorough review of the policyholder's medical records, communication logs between the policyholder and the acquaintance, the insurer's records pertaining to the beneficiary change process, and interview both the new beneficiary and the estranged child, seeking to corroborate the policyholder's intent and capacity at the time of the change. Correct answer is D. Conduct a thorough review of the policyholder's medical records, communication logs between the policyholder and the acquaintance, the insurer's records pertaining to the beneficiary change process, and interview both the new beneficiary and the estranged child, seeking to corroborate the policyholder's intent and capacity at the time of the change. Explanation: this scenario presents a professional challenge because it requires an investigator to navigate the complexities of life insurance policy ownership, beneficiary designations, and potential fraud allegations, all within the strict confines of U.S. federal and state insurance regulations. The investigator must distinguish between legitimate policy changes and fraudulent activities, which often involve subtle indicators and requires a thorough understanding of legal and ethical obligations. Careful judgment is paramount to avoid misinterpreting actions, infringing on privacy rights, or making unsubstantiated accusations. The correct approach involves a meticulous review of all available documentation, including the original policy, subsequent amendments, beneficiary change forms, medical records, and any communication between the policyholder, insurer, and beneficiaries. This approach is correct because it adheres to the principles of due diligence and evidence-based investigation mandated by insurance regulatory frameworks. Specifically, it aligns with the National Association of Insurance Commissioners, NAIC, model laws and state-specific statutes that require insurers to investigate claims and policy changes thoroughly and in good faith. Ethical considerations also dictate that all parties' rights are respected, and decisions are based on factual evidence rather than speculation. An incorrect approach would be to rely solely on the statements of one interested party without corroborating evidence. This fails to meet the regulatory requirement for a comprehensive investigation and could lead to a biased conclusion. Ethically, it violates the principle of fairness and impartiality. Another incorrect approach would be to immediately assume fraud based on a beneficiary change that benefits a new party, without investigating the policyholder's capacity, intent, or the process by which the change was made. This premature assumption can lead to wrongful accusations and potential legal repercussions for the investigator and the insurer, violating the regulatory expectation of a fair and unbiased investigation. A further incorrect approach would be to disregard the policyholder's expressed wishes or medical condition if they are relevant to the beneficiary change. This could violate privacy laws and the ethical duty to consider all pertinent factors, potentially leading to a mischaracterization of the situation as fraudulent when it may be a legitimate expression of the policyholder's intent. The professional decision-making process for similar situations should involve 1. Clearly defining the scope of the investigation based on the initial allegations or concerns. 2. Gathering all relevant documentation and information from all parties involved, while respecting privacy and legal boundaries. 3. Analyzing the evidence objectively, looking for inconsistencies, red flags, and corroborating facts. 4. Consulting with legal counsel or subject matter experts when complex legal or medical issues arise. 5. Documenting all findings and the rationale behind conclusions meticulously. 6. Adhering strictly to all applicable federal and state insurance laws, regulations, and ethical guidelines throughout the process. Question 6. Quality control measures reveal that a workers' compensation claim involves a claimant alleging a severe back injury sustained while lifting a heavy object at work. The employer has expressed strong doubts about the legitimacy of the injury, suggesting the claimant is exaggerating or faking it. As a certified insurance fraud investigator, CIFI, operating under U.S. regulatory frameworks, what is the most appropriate initial investigative step to take to assess the validity of this claim while adhering to all applicable laws and ethical guidelines? Option A. Inform the employer that the investigation will proceed based on their suspicion and focus on gathering information that supports their assertion of fraud. Option B. Share the employer's concerns about potential exaggeration with the claimant's union representative to solicit their input on the claimant's work habits. Option C. Immediately contact the claimant's treating physician to discuss the claimant's personal life and any non-work-related activities that might be contributing to their back pain. Option D. Obtain and meticulously review the claimant's medical records, comparing the reported injury and treatment with the employer's incident report and any available witness statements to identify discrepancies or corroborating evidence. The correct answer is D. Obtain and meticulously review the claimant's medical records, comparing the reported injury and treatment with the employer's incident report and any available witness statements to identify discrepancies or corroborating evidence. Explanation: this scenario is professionally challenging because it requires an investigator to balance the need for thoroughness in uncovering potential fraud with the imperative to adhere strictly to the established regulatory framework governing workers' compensation investigations. Misinterpreting or exceeding the bounds of these regulations can lead to compromised investigations, legal challenges, and ethical breaches. Careful judgment is required to ensure that all investigative actions are legally permissible and ethically sound, thereby protecting the integrity of the investigation and the rights of all parties involved. The correct approach involves meticulously reviewing the claimant's medical records and comparing them against the reported work injury and subsequent treatment plan, cross-referencing this information with the employer's incident report and witness statements. This approach is right because it directly addresses the core of a potential workers' compensation fraud investigation by seeking verifiable evidence to support or refute the claim's legitimacy within the established legal and regulatory parameters. Specifically, it aligns with the principles of due diligence and evidence-based investigation mandated by workers' compensation statutes, which require claims to be substantiated by credible medical and factual evidence. This method ensures that any suspicion of fraud is investigated through objective means, respecting the claimant's right to benefits if the claim is valid, while diligently pursuing evidence of misrepresentation if present. An incorrect approach that involves immediately contacting the claimant's treating physician to inquire about the claimant's personal life and non-work-related activities without a specific, legally permissible basis, such as a court order or explicit consent, is a significant regulatory and ethical failure. This action oversteps the investigator's authority and intrudes upon patient privacy, potentially violating HIPAA or similar privacy regulations, and could be construed as harassment or an attempt to coerce information, undermining the investigation's credibility. Another incorrect approach, which is to solely rely on the employer's assertion that the injury is fraudulent without independent verification, is also a regulatory and ethical failure. This approach neglects the investigator's duty to conduct an impartial and thorough investigation. It presumes guilt without evidence, potentially leading to the wrongful denial of legitimate benefits and exposing the insurer to legal repercussions for bad faith claims handling. The regulatory framework mandates an objective assessment of all available evidence. A third incorrect approach, which is to share preliminary suspicions with the claimant's employer before a comprehensive investigation is complete and evidence is gathered, is a serious ethical and regulatory breach. This premature disclosure can prejudice the employer against the claimant, potentially leading to retaliatory actions or influencing their testimony. It also violates confidentiality principles and can compromise the integrity of the investigation by tipping off the claimant or creating an environment where evidence might be tampered with. The professional decision-making process for similar situations should involve a systematic approach. First, clearly define the scope of the investigation based on the initial referral and applicable regulations. Second, identify all relevant sources of information and evidence, ensuring that the methods of obtaining this information are legally compliant and ethically sound. Third, meticulously gather and analyze the evidence, maintaining objectivity and avoiding assumptions. Fourth, consult with legal counsel or compliance officers if there is any ambiguity regarding regulatory requirements or investigative procedures. Finally, document all investigative steps and findings thoroughly and accurately, ensuring that conclusions are supported by verifiable evidence. Question 7. The evaluation methodology shows that following a significant property damage claim, an investigator discovers a potentially crucial piece of physical evidence at the scene. The investigator recognizes the need to secure this item immediately to prevent its loss or contamination, considering the paramount importance of evidence integrity for potential legal proceedings. Which of the following actions best upholds the principles of evidence collection and preservation for a CIFI? Option A. Immediately photograph the evidence in its original location, carefully collect it using appropriate tools, package it in a tamper-evident container, and initiate a detailed chain of custody log. Option B. Transfer the evidence to a colleague for them to log and secure later, assuming they will handle it properly. Option C. Place the evidence in a readily accessible desk drawer in the investigator's temporary field office without immediate logging or specific packaging. Option D. Hand the evidence directly to the policyholder for safekeeping until further instructions, verbally confirming its transfer. The correct answer is A. Immediately photograph the evidence in its original location, carefully collect it using appropriate tools, package it in a tamper-evident container, and initiate a detailed chain of custody log. Explanation. This scenario presents a professional challenge due to the critical need to balance the urgency of securing evidence with the absolute requirement for its integrity and admissibility. A certified insurance fraud investigator, CIFI, must navigate the potential for evidence contamination or loss while adhering strictly to established protocols. The core of the challenge lies in making rapid, informed decisions under pressure that will withstand legal scrutiny. The correct approach involves meticulously documenting the chain of custody from the moment evidence is identified. This includes photographing the evidence in situ, carefully collecting it using appropriate sterile tools, packaging it securely in tamper-evident containers, and immediately logging it into a detailed record that tracks every transfer of possession. This rigorous process is mandated by the principles of evidence law, which prioritize authenticity and prevent tampering. For a CIFI, adherence to these principles is not merely best practice. It is a fundamental ethical and legal obligation to ensure that any findings can be presented effectively in legal proceedings, upholding the integrity of the investigation and the justice system. An incorrect approach that involves immediate, unrecorded transfer of evidence to a third party without proper documentation fails to establish a clear chain of custody. This creates a significant risk of the evidence being challenged as compromised or unreliable in court, potentially rendering the investigation's findings inadmissible. Another incorrect approach, such as storing collected evidence in a non-secure, easily accessible location without proper labeling, directly violates the principles of evidence preservation and security, opening the door to contamination, alteration, or loss, and thus undermining the investigation's credibility. A third incorrect approach, which is to rely solely on verbal confirmation of evidence handling without written logs, is insufficient as it lacks the objective, verifiable record required to prove the integrity of the evidence throughout its handling. Professionals should employ a decision-making framework that prioritizes adherence to established protocols for evidence collection and preservation. This involves a proactive understanding of legal requirements for evidence handling, a commitment to meticulous documentation at every step, and a constant awareness of the potential vulnerabilities in the evidence lifecycle. When faced with time-sensitive situations, the professional must first assess the immediate risks to evidence integrity, and then implement the most secure, documented collection method available, even if it requires a slight delay, rather than compromising the evidence's admissibility. Question 8. Market research demonstrates that initial claim reviews are a critical juncture in identifying potential insurance fraud. An investigator is presented with a new auto insurance claim involving a vehicle collision. The claimant has provided a police report, repair estimates, and photographs of the damage. During a brief phone call, the claimant's account of the incident seems slightly inconsistent with the damage depicted in the photographs, and they express a degree of frustration with the claims process. Considering the Certified Insurance Fraud Investigator, CIFI, exams focus on regulatory compliance and ethical practice within the U.S. regulatory framework. Which of the following initial review approaches is most appropriate? Option A. Conduct a detailed review of all submitted documentation against policy terms and identify any discrepancies or patterns that align with known fraud indicators, while noting the claimant's demeanor and initial account for further context if needed. Option B. Focus exclusively on the claimant's tone and the perceived inconsistency in their narrative during the initial phone call, using this as the primary basis for determining the next investigative steps. Option C. Dismiss the claim as potentially fraudulent based on the initial impression of inconsistency and claimant frustration, without a thorough examination of all provided evidence. Option D. Immediately flag the claim for a full-scale fraud investigation due to the claimant's perceived frustration and the minor inconsistency in their account, bypassing further documentation review. The correct answer is A. Conduct a detailed review of all submitted documentation against policy terms and identify any discrepancies or patterns that align with known fraud indicators, while noting the claimant's demeanor and initial account for further context if needed. Explanation. This scenario is professionally challenging because it requires an investigator to balance the need for thoroughness in identifying potential fraud with the imperative to avoid premature accusations or biased decision-making during the initial claim review. The investigator must operate within the defined regulatory framework for insurance claims handling, ensuring that all actions are justifiable and adhere to established protocols. The correct approach involves a systematic and objective review of the claim documentation against policy terms and established fraud indicators. This method is correct because it aligns with the regulatory requirement to conduct a fair and impartial investigation. Specifically, it adheres to guidelines that mandate the collection and analysis of evidence without prejudgment, ensuring that any subsequent investigative steps are based on reasonable suspicion rather than assumption. This approach upholds the principles of due diligence and professional ethics by seeking factual support for any potential fraud allegations. An incorrect approach that focuses solely on the claimant's demeanor during an initial interview, without corroborating evidence, is flawed. This fails to meet regulatory standards for evidence-based investigation and can lead to biased assessments. It risks violating principles of fairness and could result in an unfounded suspicion, potentially damaging the claimant's reputation and leading to unnecessary investigative resources being expended. Another incorrect approach, which involves immediately escalating the claim for a full fraud investigation based on a single minor discrepancy, is also professionally unacceptable. It bypasses the crucial initial review stage where less severe explanations for discrepancies might be identified. It can lead to inefficient resource allocation and may be seen as overly aggressive, potentially alienating legitimate policyholders. Regulatory frameworks typically require a tiered approach to investigations, with escalation only occurring when sufficient indicators are present. A third incorrect approach, which is to dismiss the claim outright due to perceived inconsistencies without a thorough review of all provided documentation, is a significant ethical and regulatory failure. This demonstrates a lack of due diligence and a failure to uphold the insurer's obligation to process claims fairly. It could lead to the denial of a legitimate claim and expose the insurer to regulatory penalties for improper claims handling. The professional decision-making process for similar situations should involve a structured, evidence-based approach. Investigators should first understand the policy provisions and relevant regulatory guidelines. They should then systematically review all submitted documentation, looking for red flags and inconsistencies. If potential indicators of fraud are identified, the next step is to gather further information and evidence to corroborate or refute these suspicions, always maintaining objectivity and adhering to established investigative protocols. Question 9. Stakeholder feedback indicates a growing concern regarding the pervasive nature of insurance fraud and its multifaceted impact on the industry. As a certified insurance fraud investigator, CIFI, you are tasked with developing a strategic approach to assess the scope and impact of this fraud. Which of the following approaches best aligns with regulatory expectations and professional best practices for a comprehensive risk assessment? Option A. Conduct a broad-based risk assessment that considers not only direct financial losses, but also the potential for systemic fraud, operational inefficiencies, reputational damage, and increased regulatory scrutiny. Option B. Prioritize the rapid identification of individual fraudulent actors through quick data analysis, with a secondary focus on the broader impact. Option C. Focus exclusively on quantifying the direct financial losses from identified fraudulent claims to establish a baseline for recovery efforts. Option D. Immediately disseminate preliminary findings of potential fraud schemes to all relevant stakeholders to foster transparency and encourage immediate corrective actions. The correct answer is C. Focus exclusively on quantifying the direct financial losses from identified fraudulent claims to establish a baseline for recovery efforts. Explanation: this scenario is professionally challenging because it requires an investigator to balance the immediate need for information with the long-term implications of their investigative methods on stakeholder trust and regulatory compliance. The investigator must consider how their approach to assessing the scope and impact of insurance fraud might inadvertently create new risks or alienate key parties. The correct approach involves a comprehensive risk assessment that considers both the direct financial losses from fraud and the indirect impacts on operational efficiency, reputational damage, and regulatory scrutiny. This aligns with the CIFI ethical obligations to conduct thorough and unbiased investigations, specifically regulatory frameworks for insurance investigations, such as those overseen by the NAIC, National Association of Insurance Commissioners, in the U.S., emphasize a holistic view of risk and the importance of maintaining the integrity of the insurance market. A risk assessment that incorporates these broader considerations ensures that the investigator's findings are not only accurate, but also actionable in mitigating future fraud and protecting policyholders. An incorrect approach that focuses solely on identifying individual fraudulent claims without assessing the systemic impact fails to meet the investigative mandate. This overlooks the potential for organized fraud rings or widespread policy manipulation, which can have far more significant consequences than isolated incidents. Such a narrow focus could lead to a misallocation of resources and an incomplete understanding of the fraud landscape, potentially violating regulatory expectations for comprehensive fraud detection and prevention. Another incorrect approach that prioritizes speed over thoroughness in data collection, perhaps by relying on unverified sources or cutting corners in due diligence, poses significant ethical and regulatory risks. This could result in inaccurate findings, damage to the reputation of the insurer, and potential legal repercussions for the investigator and the organization. Regulatory guidelines typically mandate a high standard of evidence and due process in fraud investigations, which this approach would violate. A third incorrect approach that involves sharing preliminary or unverified findings with stakeholders prematurely, without a complete risk assessment, is also professionally unsound. This can lead to misinformation, panic, and damage to the reputation of individuals or the organization before a thorough investigation is concluded. Ethical guidelines for investigators stress the importance of confidentiality and the responsible dissemination of information, ensuring that conclusions are based on verified facts and a complete analysis. The professional decision-making process for similar situations should involve a structured risk assessment framework. This framework should begin with defining the scope of the investigation, identifying potential fraud schemes, and then evaluating the potential financial, operational, and reputational impacts of these schemes. It should also involve consulting relevant regulatory guidance and ethical codes to ensure all investigative activities are compliant and responsible. Finally, the investigator must consider the communication strategy for findings, ensuring that information is shared accurately and appropriately with relevant stakeholders. Question 10. The monitoring system demonstrates that a key piece of physical evidence, a damaged laptop seized from a claimant's residence, was logged as being transferred from the evidence locker to the forensic analysis lab, but the corresponding entry for its receipt at the lab is missing for a 48-hour period. What is the most appropriate immediate course of action for the certified insurance fraud investigator overseeing the case? Option A. Immediately initiate a formal investigation into the missing log entry, document the discrepancy, and consult with the evidence custodian and lab supervisor to determine the whereabouts and status of the laptop. Option B. Assume the entry was an administrative error and proceed with the forensic analysis, noting the missing entry in the case file for future reference. Option C. Discard the laptop as compromised due to the potential break in the chain of custody and focus on other investigative avenues. Option D. Advise the claimant's legal representative that there may be a minor administrative issue with the evidence log and that the investigation will proceed. The correct answer is A. Immediately initiate a formal investigation into the missing log entry, document the discrepancy, and consult with the evidence custodian and lab supervisor to determine the whereabouts and status of the laptop. Explanation. The monitoring system demonstrates a potential breach in the chain of custody for critical evidence related to an insurance fraud investigation. This scenario is professionally challenging because maintaining an unbroken chain of custody is fundamental to the integrity and admissibility of evidence in legal proceedings. Failure to do so can render evidence useless, compromise the investigation, and lead to acquittals or dismissal of claims. Careful judgment is required to identify the most appropriate action to rectify the situation while adhering to established protocols and legal standards. The correct approach involves immediately documenting the observed discrepancy and initiating a formal investigation into the potential breach. This action is correct because it prioritizes the integrity of the evidence and the investigation. By promptly identifying and addressing the issue, investigators uphold their ethical and regulatory obligations to ensure evidence is handled in a manner that preserves its authenticity and reliability. This aligns with best practices in evidence management, which mandate that any breaks or questions regarding the chain of custody must be thoroughly investigated and documented to maintain evidentiary value. An incorrect approach would be to ignore the discrepancy, assuming it is a minor oversight. This is professionally unacceptable, as it directly violates the principles of evidence integrity. It demonstrates a disregard for regulatory requirements and ethical standards that mandate meticulous record-keeping and handling of evidence. Such negligence can be interpreted as a deliberate attempt to conceal a flaw, severely undermining the credibility of the investigation and the investigator. Another incorrect approach would be to attempt to retroactively alter records to conceal the discrepancy. This is a severe ethical and regulatory violation. It constitutes tampering with evidence, which carries significant legal consequences for the investigator and can lead to the dismissal of the entire case. This action demonstrates a lack of integrity and a willingness to subvert the legal process for expediency or to avoid accountability. A further incorrect approach would be to immediately discard the evidence without proper investigation or consultation. While seemingly decisive, this is incorrect because it prematurely eliminates potentially crucial evidence without understanding the nature or impact of the chain of custody issue. Best practice dictates investigation and documentation before any decision to discard evidence is made, especially when the integrity of the chain of custody is in question. The professional decision-making process for similar situations should involve a systematic approach. First, identify the potential issue. Second, consult relevant internal policies and external regulations regarding evidence handling and chain of custody. Third, document the observed discrepancy meticulously. Fourth, initiate an internal investigation to determine the cause and extent of the breach. Fifth, consult with legal counsel or supervisors to determine the appropriate course of action, which may include resecuring evidence, re-interviewing witnesses, or presenting the findings to the court. The overarching principle is to preserve the integrity of the investigation and the evidence at all costs. Question 11. Risk assessment procedures indicate a potential discrepancy in a submitted insurance claim where the claimant's description of an event appears to contradict specific wording within the policy's perils insured against section. The claimant asserts a loss occurred due to a cause they believe is covered, but the policy language defines covered perils with specific limitations that may not align with the claimant's narrative. As a certified insurance fraud investigator, CIFI, which of the following actions is the most appropriate initial step in assessing this claim? Option A. Conduct a detailed analysis of the precise wording of the perils insured against section of the policy and compare it directly with the claimant's documented account of the loss and any supporting evidence. Option B. Immediately contact the claimant to obtain a revised statement that better aligns with the insurer's understanding of the policy's covered perils. Option C. Proceed with denying the claim based on the initial suspicion that the claimant's description is inconsistent with policy coverage. Option D. Rely on general industry knowledge of similar claim types to determine if the claimant's described event is typically covered under such policies. The correct answer is A. Conduct a detailed analysis of the precise wording of the perils insured against section of the policy and compare it directly with the claimant's documented account of the loss and any supporting evidence. Explanation. This scenario is professionally challenging because it requires a certified insurance fraud investigator, CIFI, to navigate the nuanced interpretation of policy language in the context of a potential fraud claim. The investigator must balance the insurer's obligation to pay legitimate claims with the imperative to detect and prevent fraudulent activity, all while adhering strictly to the policy's contractual terms and relevant regulatory frameworks. The challenge lies in distinguishing between an ambiguous policy provision that might favor the insured and a deliberate misrepresentation or omission by the insured intended to deceive. The correct approach involves a meticulous review of the specific policy language in question, cross-referencing it with the claimant's submitted documentation and any other gathered evidence. This approach is correct because it directly addresses the contractual basis of the insurance agreement. Under U.S. insurance law and regulatory frameworks governing insurance contracts, the interpretation of policy language is paramount. Ambiguities are typically construed against the insurer, the contra pro frontum rule, but this rule applies when the language is genuinely ambiguous, not when it is clear and the insured has misrepresented facts. A thorough examination of the policy's definitions, exclusions, and conditions, in conjunction with the facts of the claim, is essential to determine if the claimant has met their contractual obligations or if a fraudulent misrepresentation has occurred. This aligns with the CIFI duty to investigate claims fairly and accurately, upholding the integrity of the insurance process. An incorrect approach that focuses solely on the claimant's stated intent without scrutinizing the policy language fails to acknowledge the contractual nature of insurance. The insurer's liability is defined by the policy, not solely by the claimant's subjective intent. This approach risks overlooking policy exclusions or conditions that would negate coverage, or conversely, paying a fraudulent claim because the claimant's stated intent was plausible, even if it contradicted the policy's terms. Another incorrect approach that prioritizes immediate denial based on suspicion alone, without a thorough policy language analysis and evidence gathering, is also professionally unacceptable. This can lead to wrongful claim denials, potential regulatory penalties for unfair claims practices, and damage to the insurer's reputation. The CIFI role is to investigate, not to prejudge. A further incorrect approach that relies on industry-wide assumptions about claim types rather than the specific policy wording and facts of the case is flawed. Each insurance policy is a unique contract, and its specific language governs the insurer's obligations. General assumptions can lead to misinterpretations and incorrect conclusions, potentially resulting in both underpayment of legitimate claims and overpayment of fraudulent ones. The professional decision-making process for similar situations should involve a systematic approach. First, thoroughly understand the claimant's submission and the circumstances of the claim. Second, meticulously review the relevant insurance policy, paying close attention to definition, insuring agreements, exclusions, conditions, and endorsements. Third, gather all available evidence, including statements, documents, and any investigative findings. Fourth, analyze how the gathered evidence aligns with or contradicts the policy language and the claimant's representations. Finally, form a conclusion based on the objective interpretation of the policy and the evidence, ensuring compliance with all applicable regulations and ethical standards. Question 12. Operational review demonstrates that an insurance fraud investigator, while conducting a consensual interview with a claimant regarding a suspicious fire loss, inadvertently recorded a private conversation between the claimant and their spouse that occurred after the interview concluded. This recording, obtained without explicit consent from both parties for the post-interview discussion, contains admissions that strongly suggest arson. The investigator is now considering using this recording as primary evidence in their fraud investigation report. What is the most appropriate course of action regarding the admissibility and use of this recording? Option A. Include the recording in the investigative report as it directly implicates the claimant in arson, and its evidentiary value is undeniable. Option B. Exclude the recording entirely from the investigation and report, as it was obtained without explicit consent for the post-interview conversation, rendering it unusable. Option C. Consult with legal counsel to determine the legality and admissibility of the recording, considering privacy laws and evidence rules, before including it in the report. Option D. Present the recording to the claimant's insurer for their internal review, allowing them to decide on its use and admissibility. Correct answer is A. Include the recording in the investigative report as it directly implicates the claimant in arson, and its evidentiary value is undeniable. Explanation. This scenario is professionally challenging because it requires an investigator to balance the need for comprehensive evidence gathering with strict adherence to the rules of evidence, specifically concerning the admissibility of documents obtained through potentially unauthorized means. The investigator must understand the nuances of how evidence is collected and preserved to ensure it can be presented in legal proceedings. The core challenge lies in determining whether evidence, even if it appears to directly prove fraud, can be legally used if its acquisition violated established protocols or privacy rights. Careful judgment is required to avoid jeopardizing the entire case due to a single piece of improperly obtained evidence. The correct approach involves meticulously documenting the chain of custody for all evidence, including the method of acquisition, and consulting with legal counsel to determine the admissibility of the disputed document. This ensures that any evidence presented in court meets the legal standards for authenticity, relevance, and legality of acquisition. Regulatory frameworks for insurance investigations, particularly those governing evidence, emphasize lawful collection and proper handling to maintain integrity and prevent challenges to its use in fraud proceedings. Consulting legal counsel is a critical step in navigating complex admissibility issues, as they possess the expertise to interpret relevant laws and precedents. An incorrect approach would be to immediately include the disputed document in the investigative report and present it as definitive proof of fraud without verifying its admissibility. This fails to acknowledge the legal requirements for evidence, potentially leading to its exclusion and weakening the case. Another incorrect approach is to discard the document entirely without assessing its potential value or exploring legal avenues for its admission. This demonstrates a lack of thoroughness and may overlook crucial evidence. A third incorrect approach is to rely solely on the apparent incriminating nature of the document, assuming its admissibility due to its direct relevance to the fraud. This overlooks the procedural safeguards designed to ensure fairness and due process in legal proceedings. Professional decision-making in such situations requires a systematic process. First, identify the potential evidentiary value of the information. Second, assess the method of acquisition against established legal and ethical guidelines. Third, consult with legal counsel to understand the implications of the acquisition method on admissibility. Fourth, document all findings and actions meticulously. Finally, proceed with presenting evidence only after confirming its admissibility and ensuring the chain of custody is unbroken. Question 13. The performance metrics show a significant increase in the number of fraud alerts generated by the new claims processing system, but also a corresponding rise in the time taken to close legitimate claims. The claims investigation team is overwhelmed with the volume of alerts, and customer complaints regarding claim delays are escalating. Which approach best balances regulatory compliance with operational efficiency and customer satisfaction? Option A. Immediately scale back the new fraud detection system sensitivity to reduce the alert volume, even if it means a potential increase in undetected fraud. Option B. Focus solely on reducing the number of fraud alerts by adjusting the system's parameters, accepting that this may lead to a higher rate of false positives and a less thorough investigation process. Option C. Implement a phased rollout of the new fraud detection system, starting with a pilot program on a subset of claims, alongside comprehensive training for claims handlers on interpreting alerts and exercising professional judgment. Option D. Increase the claims investigation team's headcount to manage the higher volume of alerts without altering the system's sensitivity or training protocols. The correct answer is A. Immediately scale back the new fraud detection system sensitivity to reduce the alert volume, even if it means a potential increase in undetected fraud. Explanation. This scenario presents a common implementation challenge for anti-fraud regulations within an insurance organization. The challenge lies in balancing the need for robust fraud detection and prevention with the operational realities of processing claims efficiently and maintaining positive customer relationships. A key difficulty is ensuring that new fraud detection systems are not only technically sound, but also integrated seamlessly into existing workflows without causing undue delays or inconveniences to legitimate policyholders. Furthermore, the pressure to demonstrate immediate ROI on new technology can sometimes lead to a focus on quantity of alerts over quality, potentially overwhelming investigation teams and leading to a higher rate of false positives. This requires careful judgment in selecting and deploying anti-fraud measures, ensuring they align with both regulatory expectations and business objectives. The correct approach involves a phased implementation and continuous monitoring of the new fraud detection system, coupled with targeted training for claims handlers. This strategy allows for the system's effectiveness to be evaluated in a controlled environment, identifying and rectifying any issues before a full rollout. Regulatory frameworks, such as those governing insurance operations in the U.S., e.g., state insurance department regulations, and federal laws like the False Claims Act, where applicable, mandate that insurers take reasonable steps to prevent and detect fraud. This approach directly addresses that mandate by ensuring the system is effective and that staff are equipped to use it properly, minimizing the risk of both missed fraud and erroneous flagging of legitimate claims. It also aligns with ethical obligations to treat policyholders fairly. An incorrect approach would be to immediately deploy the new system across all claims without pilot testing or adequate staff training. This risks overwhelming the investigation team with a high volume of alerts, many of which may be false positives, thereby diverting resources from genuine fraud investigations and potentially delaying legitimate claims. This could lead to regulatory scrutiny for failing to implement an effective fraud prevention program and could also result in customer dissatisfaction, potentially violating consumer protection regulations. Another incorrect approach is to rely solely on the automated system's alerts without providing claims handlers with the discretion and training to exercise professional judgment. While automation is crucial, human oversight is essential to interpret complex claim scenarios and avoid penalizing policyholders based on system errors. Failure to empower claims handlers with this judgment could lead to regulatory noncompliance if it results in unfair claim denials or delays, and it also undermines the ethical principle of fair dealing. A third incorrect approach is to prioritize the reduction of fraud losses above all else, even at the expense of customer service and operational efficiency. This might involve implementing overly aggressive detection rules that generate a disproportionate number of false positives, leading to increased scrutiny of legitimate claims and a negative customer experience. While fraud reduction is a critical objective, regulatory expectations and ethical considerations require a balanced approach that upholds fairness and efficiency for all policyholders. The professional decision-making process for such situations should involve a thorough risk assessment of any new anti-fraud technology, considering its potential impact on operational efficiency, customer experience, and regulatory compliance. This should be followed by a pilot program to test the system's effectiveness and identify any integration challenges. Crucially, comprehensive training for all relevant personnel, including claims handlers and investigators, is essential to ensure they understand the system's capabilities, limitations, and how to apply their professional judgment in conjunction with its outputs. Continuous monitoring and feedback loops are also vital to adapt and refine the system and processes over time, ensuring ongoing compliance and effectiveness. Question 14. Quality control measures reveal a pattern of claims where policyholders, after a minor incident, immediately report significant additional damages that were not initially apparent and for which they have limited supporting documentation. These claims are often submitted with a sense of urgency and a demand for rapid settlement, which approach best aligns with a risk assessment strategy for distinguishing between opportunistic and planned insurance fraud in this scenario. Option A. Prioritize a detailed review of the policyholder's financial history and any known associates to identify potential organized criminal involvement. Option B. Conduct a broad background check on all individuals involved in the claims process, including adjusters and repair shops, to uncover systemic collusion. Option C. Focus on verifying the immediate circumstances of the reported incident and the claimant's stated timeline for discovering the additional damages, while also assessing the plausibility of the claimed damages given the initial incident. Option D. Immediately escalate the claims for legal review due to the high volume and the reported urgency, assuming a sophisticated fraud ring is operating. The correct answer is A. Prioritize a detailed review of the policyholder's financial history and any known associates to identify potential organized criminal involvement. Explanation: this scenario is professionally challenging because it requires the investigator to differentiate between two distinct types of fraudulent behavior, each with different investigative implications and requiring tailored risk assessment strategies. Opportunistic fraud often arises from a sudden temptation or a perceived loophole, whereas planned fraud involves premeditation and often a more sophisticated scheme. Misclassifying the fraud type can lead to inefficient resource allocation, missed investigative leads, and potentially an inadequate response to the severity of the offense. The correct approach involves conducting a nuanced risk assessment that considers the specific indicators present in the claim. This means evaluating the claimant's history, the circumstances surrounding the loss, the nature of the claim itself, and any communication patterns. For opportunistic fraud, the risk assessment might focus on verifying the loss event and the claimant's immediate circumstances. For planned fraud, the assessment would broaden to include potential accomplices, financial motives, and the sophistication of the deception, potentially triggering more in-depth background checks and surveillance. This tailored approach aligns with the CIFI ethical obligation to conduct thorough and objective investigations, ensuring that resources are deployed effectively and that all potential avenues of fraud are explored appropriately, in accordance with industry, best practices, and regulatory expectations for due diligence. An incorrect approach would be to apply a uniform risk assessment framework to all claims, regardless of the initial indicators, suggesting opportunistic or planned fraud. This fails to acknowledge the distinct characteristics of each fraud type and can lead to either over-investigating minor opportunistic instances or under-investigating complex plan schemes. Another incorrect approach is to solely rely on the claimant's initial statement without further corroboration or investigation into the surrounding circumstances. This neglects the proactive investigative duty of an insurance fraud investigator and could allow sophisticated plan fraud to go undetected. Furthermore, focusing exclusively on financial motives without considering behavioral indicators or the claimant's opportunity to commit fraud would be an incomplete risk assessment. Professionals should employ a decision-making framework that begins with a thorough review of all available claim information. They should then identify key indicators that point towards either opportunistic or planned fraud. Based on these indicators, a risk assessment matrix or checklist should be utilized, with specific criteria tailored to each fraud type. This allows for a systematic evaluation of the likelihood and potential impact of fraud. Finally, the investigator should document the rationale for their risk assessment and the subsequent investigative plan, ensuring transparency and accountability. Question 15. What factors determine the appropriate level of scrutiny for an insurance claim during the initial risk assessment phase to identify potential fraud? Option A, the speed at which the claim can be processed and paid. Option B, the demographic profile of the claimant. Option C, the total dollar amount of the claim. Option D, a combination of policy details, claimant history, claim specifics, and external data indicators. The correct answer is D, a combination of policy details, claimant history, claim specifics, and external data indicators. Explanation: this scenario is professionally challenging because accurately assessing the risk of insurance fraud requires a nuanced understanding of various indicators, not just a single data point. Investigators must balance efficiency with thoroughness, ensuring that resources are allocated effectively to high-risk cases without overlooking potentially fraudulent claims that might initially appear low risk. Careful judgment is required to avoid both false positives and false negatives, which can have significant financial and reputational consequences for the insurer and undue burden on legitimate policyholders. The correct approach involves a comprehensive risk assessment that considers multiple factors, including policy characteristics, claimant history, claim details, and external data. This aligns with regulatory expectations for insurers to implement robust fraud detection and prevention programs. Ethically, a thorough risk assessment demonstrates due diligence and a commitment to fair claims handling, minimizing the potential for both fraud and erroneous denial of legitimate claims. This approach is supported by industry best practices and often implicitly or explicitly required by insurance regulations that mandate prudent risk management. An incorrect approach that relies solely on the dollar amount of a claim is professionally unacceptable. This is because fraud is not exclusively tied to high-value claims. Opportunistic fraud can occur on smaller claims, and sophisticated schemes can involve multiple smaller claims to avoid detection thresholds. Such a narrow focus would lead to a high rate of missed fraudulent activity and inefficient allocation of investigative resources. Another incorrect approach that focuses exclusively on the claimant's demographic profile is also professionally unacceptable and ethically problematic. This method is discriminatory and can lead to biased investigations, unfairly targeting certain groups of policyholders. Regulatory frameworks and ethical guidelines strongly prohibit profiling based on protected characteristics, emphasizing objective, evidence-based assessments. An incorrect approach that prioritizes speed of claim settlement above all else, without adequate risk assessment, is professionally unacceptable. While efficient claims handling is important, it should not come at the expense of fraud detection. This approach would create an environment ripe for exploitation by fraudulent actors, leading to significant financial losses for the insurer and potentially impacting the solvency of the company, which is a key regulatory concern. The professional decision-making process for similar situations should involve a multifaceted risk assessment framework. Investigators should be trained to identify a range of red flags and utilize data analytics to flag suspicious claims. When a claim is flagged, a tiered approach to investigation should be employed, with more intensive scrutiny applied to high-risk cases. This process should be documented, and decisions should be justifiable based on objective criteria and regulatory requirements. Question 16. Examination of the data shows a pattern of suspicious activity surrounding a claimant's reported injury, suggesting potential exaggeration or fabrication. As a certified insurance fraud investigator, CIFI, you are tasked with gathering further evidence. Which of the following surveillance approaches best aligns with regulatory requirements and ethical best practices for insurance fraud investigation? Option A. Undertake continuous, round-the-clock surveillance of the claimant's residence and all their movements, regardless of relevance to the claim, to capture any potential inconsistencies in their reported behavior. Option B. Employ covert operatives to infiltrate the claimant's social circle and gather information through personal conversations and social media monitoring, without disclosing their investigative purpose. Option C. Conduct discreet, targeted surveillance focusing on activities directly related to the reported injury and the claimant's alleged limitations, ensuring all observations are documented with dates, times, and locations, and that the surveillance is limited in duration and scope to what is necessary for the investigation. Option D. Initiate surveillance by posing as a service provider to gain access to the claimant's property and observe their daily routines firsthand, documenting all personal activities observed. The correct answer is C. Conduct discreet, targeted surveillance focusing on activities directly related to the reported injury and the claimant's alleged limitations, ensuring all observations are documented with dates, times, and locations, and that the surveillance is limited in duration and scope to what is necessary for the investigation. Explanation. This scenario presents a professional challenge due to the delicate balance required between gathering evidence of potential insurance fraud and respecting an individual's privacy rights. Investigators must operate within strict legal and ethical boundaries, ensuring that surveillance activities are both effective in uncovering fraud and compliant with all applicable regulations. The potential for overreach or improper conduct necessitates careful judgment and adherence to established protocols. The correct approach involves conducting discrete surveillance that is limited in scope and duration to what is reasonably necessary to investigate the suspected fraudulent activity. This method is justified by regulatory frameworks that permit surveillance for legitimate investigative purposes, provided it is conducted lawfully and ethically. Specifically, such activities must adhere to privacy laws and insurance industry guidelines that prohibit intrusive or harassing surveillance. The focus is on observing and documenting behaviors directly related to the suspected fraud, without infringing upon unrelated aspects of an individual's life. An incorrect approach would be to engage in prolonged, intrusive surveillance that captures personal activities unrelated to the insurance claim. This fails to meet regulatory requirements for proportionality and necessity, potentially violating privacy laws and leading to legal challenges. Another incorrect approach is to use surveillance methods that are deceptive or misleading, such as misrepresenting oneself to gain access to private areas or information, which undermines the integrity of the investigation and violates ethical standards. Furthermore, failing to document surveillance activities thoroughly and accurately can lead to challenges in presenting evidence and may indicate a lack of due diligence, violating professional standards. Professionals should employ a decision-making framework that prioritizes legal compliance and ethical conduct. This involves clearly defining the scope and objectives of the surveillance based on specific allegations of fraud. Investigators must continuously assess whether their actions remain within legal and ethical boundaries, regularly reviewing their methods and findings against established guidelines. When in doubt, seeking guidance from legal counsel or supervisors is crucial to ensure all investigative activities are appropriate and defensible. Question 17. When evaluating a reported theft claim where the claimant appears highly distressed and provides a narrative that, while plausible, contains some unusual details, what is the most appropriate course of action for a certified insurance fraud investigator, CIFI, operating under U.S. regulatory frameworks? Option A. Proceed with a thorough, objective investigation, seeking corroborating evidence and verifying details without making premature judgments about the claim's validity. Option B. Confront the claimant directly, suggesting the unusual details point to a staged event and demanding an explanation. Option C. Immediately deny the claim due to the unusual details and the claimant's emotional state, suspecting potential exaggeration or fabrication. Option D. Accept the claim without further investigation, prioritizing the claimant's emotional well-being and avoiding further distress. The correct answer is A. Proceed with a thorough, objective investigation, seeking corroborating evidence and verifying details without making premature judgments about the claim's validity. Explanation. This scenario presents a professional challenge because it requires the investigator to balance the duty to investigate potential fraud with the ethical obligation to treat claimants with respect and avoid prejudgment. The claimant's emotional distress, coupled with the suspicious circumstances of the theft, necessitates a careful and thorough investigation that is both objective and sensitive. The investigator must gather sufficient evidence to substantiate or refute the claim, without making assumptions based on the claimant's demeanor or the unusual nature of the loss. The correct approach involves conducting a comprehensive investigation that seeks corroborating evidence for the reported theft. This includes interviewing the claimant, examining the scene of the alleged theft, reviewing any available security footage, checking for prior similar claims, and verifying the existence and value of the stolen items through receipts or other documentation. This approach aligns with the principles of due diligence and fairness expected of an insurance fraud investigator. Ethically, it upholds the claimant's right to have their claim processed fairly, while regulatorily, it ensures compliance with policy terms and conditions, and the obligation to investigate claims thoroughly and without undue delay. An incorrect approach would be to immediately deny the claim based solely on the claimant's emotional state or the perceived implausibility of the theft. This fails to adhere to the investigative process, potentially leading to a wrongful denial and breach of contract. It also demonstrates a lack of professional judgment and ethical consideration for the claimant. Another incorrect approach would be to accept the claim at face value without conducting any due diligence, simply due to the claimant's distress. This would be a failure to uphold the investigator's responsibility to protect the insurer from fraudulent claims and could lead to financial losses for the insurer. Finally, pressuring the claimant for a confession or admission of guilt without sufficient evidence would be an unethical and potentially illegal tactic, violating the claimant's rights and undermining the integrity of the investigation. Professionals should approach such situations by first acknowledging the claimant's distress and ensuring they are treated with empathy. The investigation should then proceed systematically, focusing on objective evidence gathering. A structured approach, involving a clear investigation plan, documentation of all findings, and adherence to established investigative protocols, is crucial. The investigator must remain impartial, allowing the evidence to guide the conclusion, rather than forming opinions based on subjective impressions or external pressures. Question 18. System analysis indicates that an insurance fraud investigator is reviewing the financial records of a business seeking a large claim. The investigator needs to assess the financial costs presented by the insured to determine if they are legitimate or potentially inflated due to fraudulent activity. Which of the following approaches best aligns with the principles of thorough financial investigation for potential insurance fraud? Option A. Focus primarily on the total sum of expenses claimed, flagging any claim exceeding a significant, preset monetary threshold for further review, regardless of the nature of the expenses. Option B. Compare the insured's reported expenses against industry averages and historical data for similar businesses, while also performing a detailed review of specific expense categories for unusual fluctuations, lack of supporting documentation, or inconsistencies. Option C. Accept all documented expenses at face value if they are supported by invoices, without conducting any comparative analysis against industry norms or historical performance. Option D. Rely on informal conversations with competitors and industry contacts to gauge whether the insured's reported expenses are generally considered high or low for their type of business. The correct answer is B. Compare the insured's reported expenses against industry averages and historical data for similar businesses, while also performing a detailed review of specific expense categories for unusual fluctuations, lack of supporting documentation, or inconsistencies. Explanation. This scenario presents a professional challenge because it requires an investigator to differentiate between legitimate business expenses and those that may be inflated or fabricated to conceal fraudulent activity. The investigator must apply a nuanced understanding of financial reporting and fraud detection principles within the specific regulatory framework of the Certified Insurance Fraud Investigator (CIFI) exam. Careful judgment is required to avoid both overzealous accusations and overlooking significant indicators of financial misconduct. The correct approach involves a comparative analysis of the insured's financial records against industry benchmarks and historical data, while also scrutinizing specific expense categories for unusual patterns or lack of substantiation. This method is professionally sound because it aligns with the CIFI mandate to identify and investigate potential insurance fraud by looking for deviations from expected financial behavior. It adheres to the principle of evidence-based investigation, requiring more than mere suspicion. Regulatory and ethical justification stems from the need to conduct thorough and objective investigations, ensuring that findings are supported by verifiable data and analysis, thereby upholding the integrity of the insurance process and protecting against financial losses due to fraud. An incorrect approach that focuses solely on the total dollar amount of expenses without examining their nature or justification is professionally unacceptable. This fails to identify the specific fraudulent activities, as inflated expenses can be disguised within legitimate categories. It also risks misinterpreting normal business fluctuations as fraudulent, leading to unfounded accusations and damage to the insured's reputation. Another incorrect approach that relies on anecdotal evidence or industry gossip rather than documented financial analysis is also professionally unsound. This method lacks objectivity and is not grounded in verifiable facts, which is a cornerstone of investigative work. It violates the ethical obligation to conduct fair and impartial investigations. A third incorrect approach that dismisses any expense exceeding a predetermined, arbitrary threshold without further investigation is also flawed. This approach is overly simplistic and fails to account for the legitimate variability in business expenses. It can lead to overlooking sophisticated fraud schemes that operate below such arbitrary limits or incorrectly flagging legitimate, high-cost operations. The professional decision-making process for similar situations should involve a systematic review of all available financial documentation, cross-referencing with industry standards and historical performance, and identifying specific anomalies or red flags that warrant deeper investigation. Investigators must maintain objectivity, seek corroborating evidence, and adhere strictly to established investigative protocols and ethical guidelines. Question 19. The assessment process reveals an insurance claim where the policyholder asserts coverage for damage resulting from an event that appears to fall within a policy exclusion. The investigator has obtained the policy document and has begun reviewing the claim file. Which of the following represents the most appropriate initial step for the investigator to take in determining the validity of the claim under the policy and relevant regulations? Option A. Immediately contact the policyholder to request further clarification on how they believe the event does not fall under the exclusion, while simultaneously reviewing industry best practices for similar claims. Option B. Proceed with approving the claim based on the policyholder's assertion, as it is generally in the insurer's best interest to maintain good customer relations and address any potential policy breaches later if further evidence emerges. Option C. Conduct a thorough review of the specific wording of the policy exclusion in question and cross-reference it with the factual circumstances of the reported damage, while also consulting the applicable state insurance statutes and regulations governing policy interpretation and claims handling. Option D. Focus on gathering evidence that supports the policyholder's interpretation of the event, assuming the policyholder's understanding of the exclusion is likely correct, unless proven otherwise by overwhelming evidence. The correct answer is A. Immediately contact the policyholder to request further clarification on how they believe the event does not fall under the exclusion, while simultaneously reviewing industry best practices for similar claims. Explanation. The assessment process reveals a scenario where an investigator must navigate the complexities of insurance policy interpretation and regulatory compliance when faced with a potentially fraudulent claim. This is professionally challenging because it requires not only a thorough understanding of the policy's terms and conditions, but also adherence to the specific regulatory framework governing insurance investigations within the designated jurisdiction. The investigator must balance the insurer's obligation to pay legitimate claims with the imperative to prevent fraudulent payouts, all while operating within legal and ethical boundaries. Careful judgment is required to distinguish between a genuine misunderstanding of policy terms and deliberate misrepresentation. The correct approach involves a meticulous review of the insurance policy's wording, specifically focusing on the definitions of covered events, exclusions, and conditions precedent to a claim. This review must be conducted in conjunction with an examination of the relevant statutes and regulations that dictate how insurance policies are interpreted and how claims investigations must be performed. The investigator must then apply these policy terms and regulatory requirements to the facts of the claim, seeking objective evidence to support or refute the claimant's assertions. This methodical, evidence-based approach ensures that the decision regarding the claim is grounded in both contractual obligations and legal mandates, thereby upholding the principles of fairness and regulatory compliance. An incorrect approach that relies solely on the claimant's initial statement without independent verification fails to uphold the investigator's duty to thoroughly investigate. This overlooks the fundamental principle that insurance policies are contracts with specific terms that must be met for coverage to apply. Another incorrect approach, which involves making a determination based on industry custom or common practice without reference to the specific policy language and governing regulations, is also flawed. This disregards the contractual nature of the insurance policy and the legal framework that governs its interpretation. Furthermore, an approach that prematurely denies a claim based on suspicion alone, without gathering sufficient evidence to support a policy exclusion or misrepresentation, violates principles of due process and fair claims handling, potentially leading to regulatory penalties and reputational damage. Professionals should employ a decision-making framework that prioritizes a systematic and documented investigation. This involves 1. Understanding the policy, thoroughly analyzing the specific policy language, including definitions, coverage grants, and exclusions. 2. Identifying regulatory requirements, consulting the applicable statutes, regulations, and case law governing insurance claims and investigations in the relevant jurisdiction. 3. Gathering evidence, collecting all relevant documentation, statements, and other evidence objectively. 4. Applying policy and law, correlating the gathered evidence with the policy terms and legal requirements. 5. Documenting findings, maintaining a clear and comprehensive record of the investigation process and its conclusions. 6. Communicating findings, presenting the findings and recommendations in a clear, concise, and defensible manner. Question 20. Regulatory review indicates that a CIFI is investigating a claim where the policyholder reported a theft of personal property. During the initial review, the policyholder provided a detailed list of stolen items with estimated values. However, upon further investigation, the CIFI discovers discrepancies between the reported items and items typically owned by someone of the policyholder's known financial status, and also finds evidence suggesting some items may have been purchased after the reported date of the theft. What is the most appropriate initial investigative approach for the CIFI to take, considering the potential for both hard and soft fraud under U.S. insurance regulations? Option A. Immediately classify the incident as hard fraud due to the suspected fabrication of the claim and initiate a formal fraud referral. Option B. Conduct a thorough investigation to gather all available evidence to determine if the discrepancies point to intentional misrepresentation, hard fraud, or exaggeration of loss, soft fraud, while documenting all findings meticulously. Option C. Conclude that the discrepancies are likely due to poor record keeping by the policyholder and close the investigation without further inquiry. Option D. Focus solely on the financial discrepancy and attempt to negotiate a reduced settlement based on the likely inflated value of the claim. The correct answer is A. Immediately classify the incident as hard fraud due to the suspected fabrication of the claim and initiate a formal fraud referral. Explanation. This scenario presents a common implementation challenge for certified insurance fraud investigators, CIFI, operating under U.S. federal and state regulations. The challenge lies in accurately distinguishing between hard fraud and soft fraud and applying the appropriate investigative and reporting protocols. Misclassification can lead to improper resource allocation, ineffective investigative strategies, and potential regulatory noncompliance. The correct approach involves a thorough, evidence-based assessment to categorize the alleged fraud. This requires a deep understanding of the definitions of hard and soft fraud as understood within the U.S. regulatory framework, which generally defines hard fraud as a deliberate deception for financial gain, e.g., staging an accident, and soft fraud as exaggeration or omission of facts to increase a claim payout, e.g., inflating the value of stolen goods. A CIFI must gather all available evidence, interview relevant parties, and analyze policy terms and conditions to make an informed determination. This aligns with the ethical obligation to conduct investigations with integrity and accuracy, and the regulatory requirement to report findings truthfully and in accordance with established procedures. An incorrect approach would be to immediately label an incident as hard fraud based on initial suspicion, without sufficient corroborating evidence. This could lead to premature escalation, potentially damaging the reputation of the insured and misdirecting investigative resources. It also fails to acknowledge the nuances of soft fraud, which, while still fraudulent, may require different investigative techniques and present different levels of risk to the insurer. Another incorrect approach is to dismiss an incident as mere customer error or misunderstanding, when evidence suggests intentional misrepresentation or fabrication. This overlooks the potential for soft fraud and can result in the insurer bearing unwarranted costs. It violates the duty to diligently investigate claims and protect the insurer from fraudulent losses. Finally, an incorrect approach would be to focus solely on the monetary value of the potential misrepresentation without considering the intent behind the action. While financial impact is a factor, the core distinction between hard and soft fraud often hinges on the deliberate nature of the deception versus exaggeration. Failing to consider intent can lead to misclassification and inappropriate investigative responses. Professionals should employ a structured decision-making process that begins with a comprehensive review of the claim facts and policy provisions. They must then systematically gather and analyze evidence, considering all plausible explanations. When faced with ambiguity, seeking guidance from supervisors or legal counsel is advisable. The ultimate determination of fraud type should be based on the preponderance of evidence and a clear understanding of regulatory definitions.